ADP out with November private payroll data. We're going to get it from Steve Leisman, but we have the person right here. This is like one of those middlemen in healthcare. Hey, Steve.
Hey, Joe. Yeah, a big miss on the ADP payrolls. The private payroll company saying private payroll shed 32,000 workers in November. That's the fourth negative number in the past 6 months.
So that's how we started the day. Then you're thinking, okay, the markets, what are the markets going to do about this? But then we had the Secretary of the Treasury come in and give us a little more relief on tariffs. He's coming in saying, well, even if the Supreme Court comes in and says, this is illegal, we have other actions we're going to immediately put in place and hopefully won't even skip a beat. So how'd the markets react to this? Well, let's get over to it. Because if you're a homeowner, maybe you're looking to buy a house in the next few months, maybe you're a realtor, loan officer, trying to figure out what's going on with rates, my goal each day is to help explain to you guys what in the heck's going on with those and the whys behind it. So let's get over to the news that we had today. You saw this right through here. Let me continue a little bit. You're going to see the areas that's really getting affected by these, and I'm going to have a little bit of something to say about that. So let's get back to Steve Leisman for a second so he can finish this, the ADP payroll reports. I'll give you my 2 cents on that, and then we're going to talk tariffs, and then we're going to see how the markets all reacted to these. It was a pretty good day all across the board.
For this series, take a look here. The estimate was for 40,000, so the street was off on this one. And how did you get there? Well, goods producing shed 19,000 workers, service producing shedding 13,000 workers. But the big story here, and I'll show you more detail on this, is what's happening with small business, down 120,000. Medium and large business doing okay, up 51 and 39,000 respectively. But take a look at this chart here. Virtually all of the job losses have come from small business, which has been negative in 6 of 7 months since April. Without those losses, ADP numbers would actually be positive.
So here's what I take out of that. A lot of people would say, oh, yeah, you own your own business, so you're a millionaire, you're a billionaire, none of these things are going to affect you. Well, this is actually proven otherwise. You see what he was saying since basically April, kind of when tariffs and everything took effect, a lot of people started, really cutting back, and that's really hurting small businesses. So try to support those small businesses out there, folks. Not all these big companies out there who the owners of those are multi-bazillionaires. So that's my public service announcement for the day. The next piece of the puzzle is my concern was tariffs were going to be deemed illegal, and then we're going to have to refund all this money somehow, and then that's going to add to our national debt by, $200 billion, whatever it would come out to be. That's going to be detrimental to interest rates and the bond market. Well, today the Secretary of the Treasury came in and gave a little relief on there, saying there's other things that we can do through court to actually put these things back into place. So that's basically some of the two major things today that calm the markets. So if you go over to here, I'm using Mortgage News Daily today because I just didn't have the time to run all these rates. So Mortgage News Daily has it today that mortgage rates are down 7 basis points. That's great news if you've been sitting on the sidelines. Now, you might say, Dan, you keep telling us to lock in. Well, it was up 9 yesterday, I think, and then the other day it was down or whatever. So please don't give yourself a heart attack. If you're closing within 30 days, I'll give you my thoughts behind this at the end of this video, as well as if you're closing, in 2-3 months, maybe even 6 months from now. I'll give you my lock or float section here down the pike just in a minute. But if you're a homeowner out there and you're trying to figure out should you refinance now or not, go to my website. We have a tool up here that's called the RateWatch 2.0. Just put in your mortgage information and then what rate you'd be interested in being notified. So when the rate hits there, we'll call you, tell you what that payment was going to be, what the cost would be, what your savings would be. If it makes sense, we'll move through that. But let's get back to the news. Mortgage rates are down basically across the board, and it was basically because of those two things. We have tariff relief, hopefully, and then we have right through here, we had some news on the ADP payroll numbers that basically puts a nail in the coffin of the Federal Reserve is going to have to cut at the next meeting. But there's some major news coming out tomorrow. We'll get to that in a second. Let's get over to how the bond market reacted today. This is fantastic news. Okay, this morning I said, okay, we might fill this gap, and we did. Okay, so if you didn't pay attention this morning, a lot of times when you have this is a 2-day chart. When you have the day after that's trading way up here, I don't mean to lose you through this, but usually when the opening of the next day is way up here, you usually fill in that gap. This is what chartists look at. Well, we filled in the gap today. The nice thing is we hit it and bounced right back up. Check this morning's video. I said, I hope we don't fill the gap, but we did, and it was up and away. But you're confused on what we're looking at, what we're looking at right now is a mortgage bond. So all you have to understand if you're watching this video, if you're a homeowner trying to figure out what mortgage rates are doing, if the price of that bond up there is going up, that means rates are coming down. All these little blips right here, these are lenders that we use, and they're telling us better, better, better. See all that stuff? That means mortgage rates are getting a little bit better. That was yesterday. Today we had a couple people do reprieves, but that's what I'm telling you. Just hang tight, folks. If you're in process now or you put in the application, we'll lock in, but don't fret. So let's get down to how the markets did, the overall markets. I think we might have a Cinderella story today. Okay, Dow Jones, S&P, NASDAQ, and Russell all up. So far, we're so good. VIX is down. Okay, I like 16. It's better than 28 where we were last week. This tells us the anxiety levels on Wall Street. Let's get over to oil. Oil might be up. Oil's up, but it's not above $60 a barrel. So that's good news. That's just for kicks. Check cryptocurrency. Folks, this is a complete Cinderella story. Here's what I mean. If you have any money in stocks or anything else, you probably have it in these right there here. So you probably made money today. Okay, this is basically saying the Wall Street's getting a little calm right now. If you got money in cryptocurrencies, you had a great day. And we watch oil too because this kind of guides us where inflation's going because oil is a huge piece of the inflation markets. So as oil prices go down, especially as they're below $60 a barrel, the inflation's going to come down. We also had a housing data this week that showed housing prices and payments are stagnant. That's 40% of our inflation numbers. So these two pieces hopefully will offset the tariff inflation that we're going to get or maybe might continue to get, and that's a whole different story. Now, the economic calendar for tomorrow, this is where the numbers start to come in. We got ADP payroll numbers today, and they were bad. But all across the board through here, there's nothing that really was like, okay, that's a major concern. Now, here's tomorrow. What we're going to get tomorrow, I only charted this, but we're going to get initial jobless claims. That gives us how many people lost their jobs. Then we're going to get continued claims. Were those people able to be absorbed into the market? And that's what some of these are maybe telling us they're not being able to. So we're going to look at that. So that gives us a bead on the jobs market. Then on Friday, we're going to get the inflation number. Now, this is the inflation number that the Federal Reserve puts the most weight into. And so if we go over to here, this is what they look at. They're going to look at the unemployment rate. Well, we're going to get basically unemployment numbers tomorrow. So that'll fill in the gap there. Over here, we're going to actually get the PCE this week. On Friday, see how that's upticking. I'm saying I called it back in March and April. I said this is probably going to uptick to about 2.7. We're there now. So if it goes to 2.8, I missed it. And we're going to check back on this as these numbers come in. So the next piece of the puzzle we want to go over is right through here. The Federal Reserve's meeting next week, and hopefully you know that, in 6 days. What are they going to do? Well, you might not be surprised on this one. There's a 90% chance, my bad, there's an 89% chance the Federal Reserve is going to cut rates at the next meeting. That's already baked in, so I don't think this is really a change in the markets. But what might change tomorrow is these employment numbers. So if you see a huge increase in numbers, I'm not expecting that. That might have the Fed go, okay, the jobs market isn't as bad as we think. But I think even if this number comes in okay, between that and the confusion with ADP and everything else, the Fed's just going to say, okay, we're just going to do this as another just certainty that we don't want the employment market to really crash. So that's today's news. Let's get over now to my locker float. So here's the section we have each day that we're going to come out and tell you, should you lock in or should you float? I'm still on the float side. I don't think, tomorrow's news is really going to be that detrimental. It could move rates a little bit up or down. It's not going to be big enough to really upset the markets because there's still confusion in a lot of these numbers. Now, if you get past 30 days, subscribe down over there. Make sure you subscribe to the RateWatch tool if you're a homeowner. But float. Just cautiously go out there and let's say, okay, you're looking to build and you're almost done. You're looking to buy in the spring. You can't really lock now anyways, but float. If you're looking to build, so you're 6 months out or so, the Federal Reserve is going to be, there's going to be a whole new cast of characters in there by next May. So most likely rates are going to continue to go down, but you might be surprised. We have a calculator that we're pushing out here soon to give you the ideas, at least run the numbers. Should you refinance now, even if you think mortgage rates are going down in the future, because you might be losing those savings while you're waiting. And we created a new calculator. It's pretty darn interesting. We'll be posting that here shortly and giving you some feedback on there. If you're a subscriber to our channel, you should be getting an email out with these calculators coming soon. So how do you do that? Well, just go to our YouTube channel and subscribe. You can get involved there. But To find out more about me and my team, just go to the Rate Update. Here's what we do. I'm actually a licensed mortgage loan officer in all 50 states as well as Puerto Rico. That's what I do. But the unique thing about this is I created this slogan for us. It's one application, one credit pool. We're going to compare your loan with over 30 different lenders. How do we do that? You got to check out that video right up through there. I just posted it the other day and it's going viral. Basically, look at it this way. We're set up with over 30 other lenders. These are mortgage companies. These are banks and credit unions. So instead of you calling them directly, just put in your application through here. We're going to pull your credit, get you approved. We can actually work with 30 some of the country's largest mortgage companies. These are a lot of the ones that you might even see in that little video that you pop up over through there on how first-time home buyers especially are looking at mortgage rates, just getting very confused. So hopefully we can help you out with that. So go to our website right through here. Here's a whole bunch of tools for you right through here. There's our RateWatch tool. But let's say you have a quote right now and you're like, Dan, can you scan my quote with over your 30 lenders to see maybe could I get a lower rate, lower fees? If so, I'll use you. Well, check it out. Just go right through here, click the loan estimate review, upload your loan estimate. We're going to need two things from you. What's your credit score? When are you looking to close? And then we're going to compare it. We're going to send you a video back within 24 hours. And we're hoping that if we can beat them on their fees and the rate, we win you as a client. So that's our report for today, folks. My name is Dan Frio, the host of the Rate Update, and I'm also a federally licensed mortgage loan officer, where our quote is one application, one credit pool. We're going to compare your loan to 30 other lenders. So that's it for today. If you haven't subscribed yet, please do so over there. Otherwise, I'll be back here at the opening bell tomorrow to go over those employment numbers and what in the heck happens with these first thing in the morning. Stay tuned, folks. But otherwise, God bless. Have a fantastic evening out there. Stay warm if you're in the Midwest. Take care, folks. Bye-bye.